So thank you everybody for joining us. My name is John Newman. I'm area director for the Maryland DC region of Keller Williams. That doesn't mean a whole lot to you all, but let's just say that I'm responsible for about 3,100 agents across the DMV and overseeing about 15 different offices.
Experience. Plus, they're so bulky.
If we can mute everybody, that'd be great. Oh, thank you. I got licensed, just so you have my background. I got licensed in 2007, February of 2007. Interesting time to get into real estate. Started building a team in 2010. My team, I turned that over to a CEO. I don't know if he's on this call, but he might be popping in. Shaq McCray. The team does about 150 transactions a year. I personally sell about 50. Matter of fact, I just had my 5th closing personally for the month. So for those of you that think that the market is soft, not necessarily, because I've had 5 closings so far in the month of June. In addition to that, then I oversee a bunch of offices, do a lot of things, and do a lot of training. So if you may have seen, this might be your first, second, third training that you've attended, but I do like 2 or 3 trainings every single month, and I'll tell you how you can find out more about that. And then today, and this came out of, I did a class on probate. I've done a couple classes on probate, and we've had a lot of interest in hard money. And as I teach classes, whether it's probate or working with investors, I always ask a question like, how many agents work with investors? And almost everybody raises their hand. And then I'm like, okay, well, why aren't you the investor? Like, I don't take a whole lot of pride in saying that I help people find great deals for other people. Like, you should be finding great deals for yourself. And then the question always comes up, well, what if you don't have the money to do it? I'm like, well, there are programs for that is called hard money. So I decided to bring one of the top hard money lenders in the DMV. I've used him personally myself for my deals, Brian Valdavia with Beltway Lending. And I'm going to let Brian Valdavia just walk you all through this. And I'm going to shut up because Brian is the expert in this, not myself. I'm good at valuing properties and finding deals, and then I go to somebody else that's good at finding the money. So, Brian, welcome, and thank you for your time. And I'll let you take it away, buddy.
You got it. Thank you very much. I appreciate you having me. I appreciate everybody jumping on. I have in the chat, I put my information, and Dante, he's kind of in the crowd too. If questions come up along the way, he can probably jump in and answer them if I don't see them once I start kind of presenting. And we'll kind of tackle from there. We can do Q&A at the end as well. That'll probably be the most fun and interactive part. I'm happy to answer, underwrite deals, do everything you want as we're kind of talking through it. So a quick background on myself. I bought my first rental property May 5th of 2021. I currently have 202 rentals, primarily in Dundalk and Essex, and some up here in Kingsville. Mostly residential stuff. Back in July of 2022, I kind of saw the need to make things easier for myself on the financing part. So I was kind of in the middle of 2 jobs and started Beltway Lending. We really offer two different types of loans, and or maybe 3 now, but I'll kind of jump into that in the slide. I'm actively buying about 37 rentals so far this year. I was telling John, I'm currently like in a little bit of a holding pattern while we work through these ones we have. But we'll probably be aggressively buying back probably by July again. And every single transaction that I do, I buy it with hard money, renovate it, and then I refinance it using that BRRRR strategy, which it's touched on in my slide. So with that, if everybody's good to go, I'll get this shared and we'll get it going. So let's see. We're gonna share this. All right, and then I'm going to give 1 second. All right, hopefully everybody can see that. We should be good to go there. So I'm gonna jump right into it. We're gonna go over when and how to use hard money loans, what they are. Maybe we'll touch on some really basic things, and then we can open it up to some more advanced topics. And again, I can talk through any active deal or investor you have. We can kind of do it in real time. So one thing about Beltway Lending, it's going to be different from a lot of lenders you see. We show this on purpose, is that we're a full we have like a full staff. It's a pretty large operation. A lot of hard money lenders operate with 2 or 3 employees or 2 or 3 owners or things like that. And it really can cause, one thing that can cause is like a lag in your service and delay in communication and maybe even not closing on time. For us, our team is broken out and very similar to the traditional mortgage world. We have like we have salespeople or people who are kind of working deals with our clients. We have a operation side who's processing loans and making sure everything goes smoothly, and then a closing team that kind of jumps in at the end to make sure that we're going to, hit the deadlines and make sure that the HUD looks right and borrowers aren't going to see something that they're not expecting. So that's, it kind of shifts away from the normal hard money line of business where you have just a handful of people and, I can never get my hard money guy on the phone. I can never, those are the things. So we want to make hard money more accessible to everyone, like whether it's a phone call or a loan. And then maybe one of our core advantages is that we have a program for first-time investors that only requires 10% down. So we know that the down payment is one of the bigger holdups for people getting started, right? Hey, I don't have enough money in the bank, or I don't have experience. We crafted a product specifically for new investors that can afford 10% down. So that's, and I'll touch on that too as we keep moving. Our products, obviously, we're here to talk about hard money today. So this is ideal for fix and flip loans. Hard money loans have a pretty good component where you can cover not only the purchase, but also the rehab. And I'll touch on that. Beltway also offers DSCR rental loans. So these are 30-year loans, very similar to what you would get on a house you would live in. However, these are targeted strictly for investment properties that are going to be rentals. And key differences here is we don't need any income documents from the client. So we're looking at the property's income, not your income. So if you're self-employed, it's no problem. I don't need W-2 or 1099 or your tax returns. It's designed to be very easy based on the property and kind of on to the next one. I'm going to jump right into hard money, and we're going to start with terms and kind of some of the lingo that gets thrown around and what does that mean, right? So from a super basic level, and then we'll build on this from there. I'm sure that if you're familiar with hard money at all, you may have heard someone say, "Oh, how many points is that?" Or "That's 3 points," or 12 and 2 and 12 and 3. So when you hear points, I want you to think origination fee. If you're familiar with the traditional mortgage world, you've always heard of people being able to pay points to buy the rate down. So the points are the same thing. It is an origination fee. Points in hard money do not buy the rate down, however. They are a straight up fee to the hard money lender. It's basically like, it's the one-time fee that is for originating the loan. In our marketplace, it's very common to see 2 and 3 points being charged. In some cases, you'll see 4 if it's a smaller deal. If you're ever, if you're working through a normal deal and you see that it's 3 points, I'd say that's nothing to turn your head at. But when you start seeing 3.5, 4 points, I'd say it's time to ask the lender why the origination fee is so high. Rates in the hard money world are very different, and the structure of the loan is very different from your normal traditional 30-year stuff. So in a hard money loan, it is interest only. So every payment you make is just covering the interest from the prior month. The average hard money rate, like interest rate that you're going to see, is going to be somewhere between 11 and 13% in our area. If you ever see a term sheet with higher than 13%, then that's something that should really be like catching your attention. Hey, why are you charging me 14% and 4 points? That's a really, really aggressive lender. And I would tell you should be looking around. The rate, so 12% is the rate. As we talk through this, every example that I talk through, I'm going to use 12% as the rate that for my examples. I do that, one, because that's generally what we charge for probably 80% of our deals. And two, when you have a 12% interest rate on a hard money loan, it makes understanding and calculating that payment very simple. So if you borrow $150,000 in a hard money loan and the interest rate is 12%, your payment is going to be $1,500 per month. It is 1% of the loan amount. Obviously, 12% divided by 12 is how we arrive at that. But it makes it easy for understanding examples. It also makes it easy for estimating your holding costs. So if I'm going to borrow $150,000 and my payment's $1,500 and it's going to take me 4 months to do it, I know that I'm looking at 4 months of that $1,500 that I have to really factor into my bottom line and make sure that I'm not make sure I'm leaving profit on the table for myself. The term for a hard money loan is really like the next defining factor. You're familiar with 30-year fixed loans for your house. You've probably heard of ARMs out there as well. That's maybe what led to the disaster in 07, 08. In a hard money loan, you're looking at maybe a 6-month term, 9-month, 12, 18, and in very rare cases, possibly 24 months. Now, one thing about Beltway is when you reach maturity or the end of your term, so month 6 or month 7, whatever the case is, Beltway we don't foreclose. Like, that's not how we're structured. We're obviously, when we're getting close to term or maturity, we're reaching out to the borrower. Hey, how's the project going? Did you run? Is it moving along? Has it stalled? We try to like feel it out and make sure that things are going okay. We do this on purpose because when I first got started, the first hard money loan I got was a 12-month term, which is a little bit more rare in the marketplace now. But I was so nervous about even getting the hard money loan for truly one reason. I was like, man, what happens if at month 12, day 1 of month 12, I'm not paid off? Either I haven't sold it, I haven't refied it, whatever the case is. Is the lender going to do I just lose the property? And the answer is no. It's really a lot of red tape for anyone to take a property back. I will say it does get expensive when you pass through the maturity date or the end of your term. There's going to be extension fees, which are going to be just new origination fees that you pay. And generally, when you pay an extension fee, you're going to get another either 3 or 6 month term, and then they will be due again. So to keep it super simple, and for hard money in our marketplace, we're seeing a lot of 6-month, 12-month, and 18-month terms. Occasionally we'll do a 9, and rarely we'll do a 24 or a 2-year term. And they are interest only. And that high interest only interest rate does add up. So the goal with hard money is, even if you have a 6-month term, to hopefully be out of it in 3 or 4 months. Our company has somewhere around $14 million in loans on the street at any given time right now, in addition to ones that we have on our bank line, which is probably another 14 or 15 million. So what we see there is our average payoff is about 4.5 months. So most borrowers are renovating it and getting it on the market by month 3 and then settling in between month 4 and 5. So I kind of point these things out there because points, rates, and a 12-month term, they can be kind of daunting, and they can be things that can cause people to not want to get started. Or, man, I don't want them to take my property back. Oh, that sounds expensive. Or, oh, I don't understand this. Hard money loans can be one of the greatest tools to scaling. It's how we scaled. Again, I mentioned I use hard money for every deal. So really becoming comfortable with it and kind of understanding the numbers, I think it's super important to growing. Okay, so this slide is we're gonna kind of bullet point out and cover some of these topics in a little bit more depth. So short term, typically 6 to 12 months. We already covered that. Great, no problem. Fast approval, close in 7 days. So this can be a real weapon for you as an agent in a couple ways. So first, because you can, once you're approved with a hard money lender, which I have a slide where I'm going to talk about that as well. But once you're approved with a hard money lender, that we will tell you, hey, we can close in 7 days, 10 days, 14 days, whatever the case is, right? That gives you as an investor or as an agent for an investor a lot of power, because now when you write those offers, you can write the offer for 7 days or 10 days or 14 days instead of having to wait the traditional 30. Obviously, you guys are sharp enough to know that when you see an offer that's ready to close in 7 days, even if it's 10 grand lighter than your best offer at 30 days with inspections, you know that you're going with that 7-day because you're eliminating a lot of risk. With hard money, we generally don't need a formal appraisal either. It's usually just a drive-by or photos from the borrower. So you can almost, and once you're pre-approved, you'll be able to eliminate some of these contingencies that are getting people that are losing deals for other people. Example being an appraisal contingency, or another example would be an inspection contingency. If you're already planning on renovating it and you have a good kind of cohesive scope of work, then you can potentially forego an inspection contingency, which again is going to make your offer more competitive. Fast close, no contingencies. Yeah, it's $10,000 less, $15,000 less, but seller's going to get paid in 7 days, and we find that that's a winning strategy for us for sure. The key component to hard money loans is the ability to borrow purchase and rehab funds. So let me jump into what that means. When you are buying a house with a conventional loan, and they say you have to bring a 10% down payment, let's say you're buying it for $100,000, you're bringing 10 grand on that conventional loan to buy the house. If you decide when you move in or when you close that you want to paint it or replace the roof or anything like that, you're paying for that out of your own pocket. It's your own money. It's not, you can't get reimbursed for it. And it is what it is. With a hard money loan, you can borrow renovation funds, hence the name Fix and Flip. So I'm going to outline our 10% down program. So on that same $100,000 purchase, you would be bringing $10,000 plus the closing costs. And let's say that the house, you take a contractor there, or you're familiar with it yourself, and you can kind of go through and come up with a scope of work. You say, okay, this house needs $50,000 worth of work, and here's what I'm going to do to the house. Basically line itemed out on an Excel, which I'm also going to show you in a minute. Us as the lender, we can lend you the 90 grand for the purchase, that 90% of your purchase price, but we can also lend you that whole $50,000 as well, which would make your total loan amount $140,000, and your monthly payment at 12% would be $1,400 a month, which is like, those numbers are ones that I do a lot. A lot of what I buy is in Dundalk and Essex, and those numbers work really well for me. So how does the rehab work? It comes in the form of draws. So you're going to see an Excel sheet, maybe in like 2 slides or so. And I'm going to go through like what a draw schedule looks like and what those things are. And as you complete list items off of the draw schedule, you can then request your rehab money from your lender. So same scenario, you bought the house, now you want to do the roof and paint. Well, once they're done, you can request the draw from us and reimburse yourself. So you're technically using our money to not only buy it, but to renovate it. For $10,000 plus closing out of your pockets, you are borrowing $140,000 against the house. So it's really a way to lever that up. We hear people all the time say, well, I have $150,000 in the bank. Why wouldn't I just buy it with cash? Great question. And, one, you are then renovating with your own money. So that's one thing I would always say is anytime you can, use other people's money. However, the bigger thing here is, I promise you from experience, it's happened. I promise you, the day you close on that deal and you spend 140 out of your 150,000, the deal of a lifetime is going to pop up the next day. It's just, that's how life works. It's going to happen. And it sucks, but it's going to happen. So then you're short on liquidity. You don't have a ton of money in the bank, and you can't even go get a hard money loan. So we tell people that if you are trying to scale, if you want to do more than one property at a time, hard money is the way, because if you have 100 grand in the bank, how many down payments could you do, right? Like maybe you're not buying $100,000 houses. Maybe you're buying $300,000 houses. So obviously your down payment goes up, but it could potentially allow you to do more than one deal at a time as you are growing. Obviously, from an investor standpoint, one word of caution I would give you is that as you're scaling, don't outpace your systems. So if you have one crew or one GC and they're at max capacity, probably not a good idea to add another project to the list, right? And then higher interest rates, which we already touched on, interest only 11 to 13% is probably where we're going to land in something like this. When and why to use hard money. I outlined a lot of positives. You might be thinking, well, if I could help my clients acquire houses faster or maybe beat some of the competition in these multiple offer situations, why not use it in other cases? So first, and it's not listed on here, hard money loans and DSCR loans, the rental loan kind of component for afterwards, can only be used on investment properties. At closing, you're going to sign a document called a statement of commercial purpose and a non-owner occupied affidavit. these two documents basically outline, A, you're not going to live there, and two, it is bought as an investment property. It is not bought for primary residence purposes. So once we've identified that, like now we can kind of jump into the other three. If you're ever looking at a house that needs renovation and you either want to flip it or make it into a rental, that is the textbook example of when to use hard money. You can, because you can borrow the purchase and the renovation money. Anytime you can renovate, not depleting your own bank account, believe me, you want to do it. The second thing here is the ability to close fast. You can win more deals. You can settle in days rather than weeks. And the other agents are obviously going to love you when you don't have any contingencies in there. So I think that's a big piece of that too. And then obviously the last piece is investors. Investors would use them for a fix and flip, something they wanted to flip, or for a buy and hold. If they wanted to add a rental to the portfolio, you can use a hard money loan for either one of those things, because at the exit strategy, either if it's a flip, is going to sell and pay back your lender, or if it's a refinance, a rental, the refinance loan is going to pay off your hard money loan, and you're going to move into a more stabilized loan. So that kind of outlines like when and why you would use hard money. And it's I'm moving pretty good through these slides. I'm moving kind of quick. Please don't hesitate to ask questions in the chat. You're also welcome to ask questions at the end. I'm good to do a Q&A. I've got all day. I'm ready to go on this. So I'll keep moving on the slides, and we'll keep going from there. So understanding the process for hard money. And I tried to simplify this. I maybe oversimplified it, but we'll kind of work through these bullets, and this is kind of in order of what it would look like. So pre-approval / deal approval, and I have these broken out on purpose. I would tell you today, if I was giving you advice, anybody that's listening to this and you're not under contract, so you're still looking for properties, or you're thinking maybe I want to dip my toes in the water, reach out to me or Dante, or both of us, doesn't matter. Most likely, if you reach out to me, I'm going to loop Dante in. He's going to jump in and help me anyway. Let us get you pre-approved. So let me tell you what that looks like, because it's very different from the conventional world. It's super simple. I need to do a soft pull on your credit. So I'm not going to ding your credit. It's not a hard pull. We just want to make sure, see where your score is. We are really looking at payment history, and not in the way you're thinking. Before we originate a hard money loan, we look at your, do you have a primary residence, and are you current on that? Because if you're not paying the mortgage for the house you live in, then you're probably not going to pay the mortgage for the house you're flipping, right? Can I get pre-approved before I find a project? Absolutely. That's kind of what I'm outlining now. This would be like pre-approval while you're looking, or while you're just thinking about getting started. So anyway, what we're going to take from you is we're going to do a soft pull on credit. We're going to need a copy of your driver's license. And then we generally want 1 or 2 months of your bank statements. And what that's for is to see, A, do they have the down payment money? Hey, I have $4,000 in the bank. Okay, that's going to be really challenging to get through closing with. Well, or I have 50 grand in the bank. Okay, that's starting to track a little bit here. I have 50 grand in the bank, but I want to offer on $1 million property. Okay, do you have any more money? Do you have any other bank accounts, a retirement account? And we look at things from a very common sense approach. So it's not like the conventional world where if you get a deposit with $40,000 in it, whether it's a commission or a friend paying you back or whatever, we don't necessarily care, or just moving it from one of your accounts to another. We don't need crazy lengthy letters of explanation. We just need you to tell us on the phone, hey, look, I got a partner on this deal, and he's helping me cover the down payment. That's where the 40 grand came from. Okay, good to go. Is that partner on the LLC? Would be our next question. And they're like, nah, they're just a gap funder. Okay, let's get it, let's keep it moving. It's going to be a very common sense pre-approval. If we think that you can do the deal financially and you are put together, then believe me, we want to lend to you. I mean, we lend to John Newman. Okay, let's just I'm just kidding. John's super buttoned up. He was a great client, and I can't wait to do more with him. But I have a back or slash here, then I have deal approval, and I'll tell you about that because it's a little different than pre-approval. We do get people, probably 15 to 20 per month, that come to us and say, hey, I'm not pre-approved with you, but I'm under contract and I got to close in 7 days or 10 days or tomorrow, I'll tell you, that's how it works. I got to close tomorrow. You think we can do it? Great. Love that. Love that. We love to approve the deals as in real time as they're happening. We can move through an approval of a deal in less than 24 hours. So honestly, we can be ready to fund in less than 24 hours too. It does stress the team, and I can already feel them rolling their eyes as I say that. But yes, we can fund within a day if we had to. But we're happy to look at deals as you're under contract as well. If you're working with another lender and maybe communication isn't there, maybe they're not explaining things as clearly as you want them to, reach out to us and say, hey, could you take a look at this? And look, if we don't get the deal, we are perfectly okay with that. My guys know, my team knows that we want to be a resource. Most of the people that work for me, almost everybody on our sales team that's working with clients, have investment properties of their own, whether that's rentals or flips. So we can look at things with a little different lens. We're not people that sit behind a desk 9 to 5 and don't really understand the game. So we know it. We can dive into it in crazy depth. I'm going to move to the next bullet point. I see the questions are kind of teeing up in here. Dante will probably jump in and reply to most of them as they're coming through. One that comes up a lot, though, is hard money loans. Would they have to be under an LLC? That answer is we would tell you it's probably a good idea that you should do that from a liability, like an exposure perspective. However, we lend to people in their personal name or in their LLC. Generally, I'd say 95% of the loans we do are to an LLC. And that's how it works. I saw a question up top about IRA with funds. So I'm assuming that's a self-directed IRA. You could use that in two ways. You could use hard money participation, which I'll outline at the very end of this. Or you can, if you are buying the property in the name of the IRA, you can use those funds for it. Yes. Or I think maybe you can make a loan to yourself. I'm not 100% sure on the IRA rules about loaning to yourself, but we do loans for self-directed IRAs frequently. Yes. Okay. Next on my list is offering with a proof of funds and a fast close. Once we pre-approve you, we are happy to write proof of funds letters for you. These are pretty similar to what you're used to on the pre-approval side, right? Get it from the lender, put it in the offer package, send it in. So we offer that, and it is tailored to you, tailored to each deal. So we do not issue blank proof of funds letters, and we do not issue proof of funds letters to just anyone. We only put those out there if we're going to work with the client or if we believe in the client, which adds a little bit of weight, right? Everybody sees these Rocket Mortgage pre-approvals, and the first thing that goes to their head is, oh my God, are they going to close, right? We're going to close. We're local. We're in this market, and my reputation also I bought a lot of transactions. My name comes up a lot. I get a lot of texts. Hey, just got another pre-approval or proof of funds with your name on it from one of your clients, which adds leverage. And my team, including myself, we're always happy to call when those offers are going out. We'll call those agents. We'll help you work through it and knock it out that way too. And then you can offer with a fast close, which obviously just ask us, hey, how much time do you think we need?
Brian, I have just a quick question, and maybe you're going to go through this, so just tell me, I'm going to cover it. But what I see with a lot of agents just is if I have, because agents will come to me and say, hey, listen, John, I think I found a good deal. And I got to tell you, rarely is the deal that they think is a good deal. It's actually a good deal. So,
that's a great question.
You have to know your numbers, and I think and maybe you'll cover this, but you got to know your numbers. And can they call you, or do you have someone on your team that's like, we'll analyze the deal? Like, here's what I think, or is it like, no, we're not going to do your work for you. And maybe you're going to cover that, but I see it a lot. I see it all the time. Agents say, hey, I think I found a deal. I look at the numbers and I'm like, no, that's not a good deal.
Yep. So great question. Here's the answer. That's good. So it's a yes and no answer. because the advice I'll give you is that if you want the absolute best underwrite on a deal, if you want to know, is this a good deal? Take it to a lender and ask them if they'll fund it. If everyone says, hey, we have, if Beltway Lending says, I'm telling you, we have a 10% down product, and we come back on this deal and we're like, hey, on this one, you're going to need 20% down. Most likely it is because the numbers are a little tighter than what we would like. And I'll outline that as well. That being said, we usually analyze and underwrite deals for borrowers once they are under contract, which I know is a little scary, right? I got to sign a contract, got to send a deposit before my lender will review it. If you call us as you're working on, everyone on my team will be happy to talk through the numbers and be happy to roll through it with you. We do stay in our lane. Famous advice I got from Shaq McRae when I first got started. I said to him, hey, Shaq, where should I be buying? And what are these houses, like, why? He said, I'm going to stay in my lane. I'm really good at being a realtor. So for us, we are also going to stay in our lane. We are going to comp it. Obviously, if we're running through it, we're going to analyze it. My team's going to look at your rehab, the photos of the property. Does a $30,000 rehab get this job done? Yes, no, we can weigh in on that. And the ARV. How ARV stands for after repair value, or your comps when you go to sell it. So, hey, when we run comps, we run them super tight. Okay. I don't take a whole zip code and figure out what fits. I take like a 4-block radius. And then if I need to, I get wider and wider and wider. So that's that. Yes, we'll absolutely underwrite them. If you call our team, we'd be happy to underwrite. We'd be happy to talk through it with you and see if there's any questions along the way. Question kind of up there says, would you be paying interest once approved? No. So once we pre-approve you and you're good to make offers, you don't actually pay. You don't do any. That's completely free. We're here to help you. We want you to get started. You don't pay any interest until you actually take the loan. So if you don't find a property for 6 months and you settle a month after that, then you're not paying for anything until that point. What ratios do you seek between property value at sale and projected to sell? So I'm going to change the terminology of that to make it a little bit more clear. As is value means today. What is the property worth as is versus projected to sell? We're going to call ARV, after repair value. So what ratio do I need between the as is and the ARV? Our max loan amount always will be somewhere between 75 and 80, usually closer to 75% of the ARV. So if if the property is gonna sell for $200,000 when you're finished, Beltway is happy to give you a loan for up to 150, and that'll be some breakdown of rehab and purchase. Generally, purchase is good. We're going to fund 90% of the purchase, then rehab. But if the numbers are too tight, we're always going to want to keep your rehab the same. We may require you to bring more of a down payment. When I was asking about IRA, I was asking based on your comment, you look at someone's bank account for funds. So example, someone's $5K, an IRA of $200K. When you just funds IRA. Yep, we would look at retirement accounts, just as if they're your money. So yes, we're happy to review your funds in there and be okay, even if you're not closing in the IRA. No problem. Maybe misunderstood that. If you pre-approve us and you don't provide a letter, what do we make the offer with? We do provide a letter. So that's kind of where we're at. We're at this proof of funds piece. Once you're pre-approved, we give you access to our proof of funds generator. So you can go in real time and create the proof of funds that you need. Now, once you click submit, it does not go to you. It actually comes to us to review it, make sure it's right, and then we'll send it to you generally within 2 or 3 minutes. And we're just looking to catch things like, is the address correct? Is the borrower name correct? Whose client is this? Is it Brian Ash? Is it Dante? Is it my client? And then you can give that to your agent, or if you guys are submitting your own offer, you can submit that with it. We do provide proof of funds letters, and you can generate them anytime. It's a hidden link on our website. So once we pre-approve you, we give you access to the generator, and then from there, as deals come, we're happy to get them to you almost immediately. Next bullet point is closing with hard money. So we've been pre-approved, we offered on a property and got it, and now closing day is coming. So this is kind of important. This is on here only for one reason, because it's a little deceptive. when I say it's 10% down plus the closing costs for this for a hard money loan or for a investment property are going to include things that are not included in, or maybe not as high of an amount in your in the traditional world. So things you're going to see that are going to be more expensive in a hard money loan that has a renovation, you're going to need a builder's risk insurance policy instead of a normal homeowner's policy. And it's got greater protection for people getting hurt and things like that. And the average cost of that is probably 2.5 times what you're generally used to paying. And all lenders are going to require that a year of it is paid for at closing. So if instead of paying $1,000 for your policy, you may be looking at 25 up to, $2,000, $2,500, obviously depending on the property itself. So that's going to make these closing costs, the origination fee, if there's appraisal fees, if there's other fees that are kind of on the HUD, it's going to increase things. Also, keep in mind, in some cases, when you make your offer, when I make offers, I usually say to people, I'll pay all the closing costs. So I'm now shifting all the transfer and recordation to my side as well. So it's not usually as simple as, hey, I'm going to need a 10% down payment plus $3 or $4 grand for closing. Sometimes it can be, 10, 11, 12, 13 grand in closing costs. And we can also talk through that. We can work with your title company way early and help get preliminary HUDs or Alta statements over to you so that you kind of know what you're getting into. We use an Excel program internally. I'm happy to share all of my resources. This is kind of an internal thing, but it allows us to help project what your closing costs are going to be. So when we send out a commitment letter, once we're getting ready for closing, it usually has a good breakdown on there for what you could expect to bring, and it's close. Again, it's a computer program. It's not like title software. Draw process, and I'm going to deep dive into this on the next slide. But basically, after closing, you're going to start renovating if there's a renovation piece on this property. And as you complete different line items from your scope of work, you can request a draw and then get reimbursed for the money that you've spent so far. And then paying off hard money, there's I guess really 3 ways to pay hard money off, and 2 of them are the common exit strategies, which would be to flip the property and sell it, and obviously your lender's going to get paid off at settlement, or to refinance it, keep it as a rental, obviously again going to get paid off at settlement from your refinance lender. And then the third, and it's very uncommon, but we have had people pay them off with cash. Obviously that still goes through settlement. We then release the loan, and they keep the property free and clear. A lot less common, but still does happen. We still see it every now and then. I'm going to move to the next slide, which is going to kind of cover the draw process and understanding the rehab piece of it. And I have 2 screen captures in here that I'm going to cover too. So in the draw process, in the very beginning, we're going to have you complete a scope of work. And actually what I can do is I'm going to pull one up. I'm going to pull up the full template of it so that you guys can see that as well. Let's see. Can you guys, I just slid this over. So this is a very standard rehab budget, like scope of work with estimates. And you'll see on the slide that I have it filled out, but in the beginning of the very beginning of the process, before we order the appraisal that early, I need this completed in order to order the appraisal, but we're going to send you this and we're going to work through it with you. We're not just going to send it to you and say, good luck. Like, actually I've been working with a client who's getting ready to do a fix and flip loan. And I was actually on the phone with her this morning and last night, and we're kind of talking through different line items. And I think that's one of the things our team brings is like, hey, I see you have $10,000 for your trash out and demo. And I think that's probably accurate, or hey, maybe that's a little heavy, but maybe we leave it, So things like that we kind of weigh in on. So this is the full kind of thing, and it touches on almost every every type of line item. You have painting, you have flooring, appliances are here. Yep, I can zoom in. Is that good? Perfect. Okay, great. So you see, great question. How do you know ahead of time how much everything's going to cost? That is a really great question. So, but you kind of see how broken out everything is. Tile for the bathroom other, waterproofing, bathroom master, kitchen appliance packages, HVAC, things of this nature. Um, is there a copy of the scope of work available? Yes, we can absolutely make it available to you before. But one thing I'll say is if you have a contractor that gives you a scope of work, because they'll generally give you a contract or a scope of work or a breakdown of when they want their draws, we can always help you take theirs and mold it into this, because this is what's going to truly be used for the draws. I'm going to slide this back out of the way and get us back to here. So we're going to complete the scope of work before the appraisal. One of the questions we got is, how do you know ahead of time how much things are going to cost? This is going to be really challenging for you in the beginning and what I would say is I would suggest finding a contractor that you can work with, that will go with you to see properties or can help you loosely estimate projects from photos. You're not going to want to drag your team out to every property that you're offering on, just because you may not end up with each property. You don't want to waste their time. I would always say, make sure you're respectful of everyone's time. I don't want to drag my contractor to 10 projects. I offer on him, I get 0 of them. And then he doesn't want to come with me to look at the next ones. So what I do, I work with a couple contractors. One of them is a guy named Rich Amaya. And I like to work with contractors who are also flipping and doing investment properties themselves, because they know they're keeping track of the money as tight as I am. They know what it takes to flip a property and be successful. And I don't necessarily want somebody who's picking the $10 a square foot tile for a flip that I'm not going to live in versus the $2.50 tile that is very common in all of your different flips right now. So I want to work with a contractor who is in the game, who is doing it themselves. And that's going to help with everything. Because what I said to Rich when we first got started was, hey, how much can I expect to pay you to do a bathroom, whether a full bathroom? So replace the tub, replace the toilet, replace the vanity, tile the floor, and tile the tub. He said, you can expect to pay me $5,500 to $6,000 per bathroom. And that is a very loose number, but that was super easy. And it happened in a phone call. It took 10 seconds for him to tell me. So then when I walked in a house and saw it had 3 bathrooms, I was like, okay, 3 times 6, $18,000 in bathrooms. And then I started to make a list. How much do you charge me for the average kitchen, for the average amount of flooring, or how much by square footage? So to answer the question, how do you know how much it's going to cost ahead of time? It's going to be challenging in the beginning. And then once you do a few deals or a deal or two, you're going to start to learn, okay, this house, I just did one like this and it was $2,500 for the floors. Okay, now I know this is going to be $2,500. So that's that. There's a question in there that says, for the draws, we pay for the work with our money first. So line 2 is begin construction / renovation after closing. And line 3 is request draws after work is completed. This is done for 2 reasons. This bullet number 3, request draws after work is completed. It is a protective measure for you and for the lender. So here's what I mean by that. If you, and it kind of ties into this bold line at the very bottom, understanding contractor deposit requirements. We take a strong stance against giving a contractor large deposits. And I'm going to tell you why that is. In the beginning of any project, most projects, if not all of them, the first thing you're going to do is going to be trash out and demo and removing old items and things like that. If you hire a contractor and the total bill is $60,000 and they say, hey, I want 1/3 of that up front, I want $20,000 to get started, because I need to buy materials to get started. If they're starting with demo, trash out, and strictly labor only items, I don't know why they need $20,000 if not to finish another job that they are working on that they ran out of money for. And what we've seen happen too many times is that you write that check for $20,000 and then the contractor disappears. That 20 is gone. You now have $40,000 left in your rehab escrow, and it's a $60,000 project. So we tell you, we take a pretty strong stance on not giving out these large deposits because it is a protective measure for you. Now, you may have worked with the same contractor for a long time and say, man, my guy always requires me to give him a deposit. Well, I would say if you've worked with him for a long time, he should be pretty understanding that he knows you're good for it. And you guys should work something out. For what I do when I start with a new contractor, when they say, hey, I want a large deposit up front, I meet with them and I say, hey, look, I'm happy to give you draws 2, 3, 4, 5 times a week if you want. But my lender, always blame the lender, we're the bad guy. My lender won't release my draws until the work is completed. So as you finish trash out and demo, I'll get that draw to you day by day if needed. And then you'll start to get ahead of them, or they'll start to get ahead of you so that it gets smooth. It's only the first few draws that may be a little uncomfortable, but I promise you that this is the safer way to protect the investor. I'm going to grab some of these questions real quick. Anyway, real quick, request to draw after the work is completed. So on the screenshot on the right that I have right here, you can see that I have paint all walls, ceiling, and trim, and I left it blank. The next line down is replace kitchen cabinets, and I have $4,500 there. So once I replace the kitchen cabinets and they're in and set, I could call the lender and say, hey, I'm ready for a draw on line 47 about my kitchen cabinets. And we'll come out, we'll take a look, or we'll get you to send pictures. And if the cabinets are in, we send you the draw. Is there a draw fee? In some cases, yes. I want to say the first 3 or 5 draws are included. But once it kind of draws out past that, some people take 1 draw at the very end, and some people take 3 draws a week. The draw fee, I want to say, is $125, maybe $199, but it nets out. You don't have to necessarily pay for that. It nets out of the rehab as we send it to you. But 3 to 5 of them are included for free. But yes, draws will come out after work's completed. Permits. I don't have any company that expedites permits. You're kind of at the mercy of the municipality at that point. I'm doing a flip now. I needed this info 2 years ago, but things change while you go through renovation. Yes, they're going to change. Let's see. Brian, do you bring a home inspector or a specialty vendor to re-inspect the work before paying out a draw? I generally do not. Usually, I'm sorry. As a lender, we do send out, we send someone out to take photos or just to check it out. Not a home inspector and not a specialty vendor though. Just somebody to come out, take photos, or we allow you to send us photos in some cases, depending on how much it is. I don't have any GCs that I have 1 or 2 GCs that I can recommend. But I would always caution you and say that like everyone in this world is good until they're not. So you should always vet them yourself and make sure that you're comfortable, with how things look and how they're going to go. I may be ahead of myself, but do you review the contractors who perform the work? We're a lender who does not care we do not care about who does the work for you. So if you are hiring a GC, great. If you're doing it yourself, also great. We don't necessarily care. I answered the draw fee thing. They charge, and then someone replied and said they charge a fee for each draw. Some of our draws end up free depending on how it works, but I want to say maybe the first 2 or 3. But this class is being recorded, and they are going to distribute it to you in a few days or something like that. All right, let's see. Let's get back over here. So I have the next slide. I have is a number breakdown. Can you get a loan if you already own the property and some work has been done but need money to finish the work? Tavon, the answer is yes, you can, if the property's free and clear. If it's free and clear, we're happy to lend you the rehab money. If you have an existing loan on it, we can still do it. We just have to make sure the numbers work, but we would basically it would be like a hard money refinance. We would pay off your existing loan and you would go into one of our loans. We need to be in first lien position. So if you have another loan already, and the numbers work out, we would pay that off so that you can jump into our loan, and then we could get you the extra rehab. So here's a number breakdown with both exit strategies. Exit 1 is going to be flip and sell, and exit 2 is going to be a DSCR refinance loan. So the example we're going to use is a $100,000 purchase, which is going to require a $10,000 down payment. The property is going to need $50,000 in rehab escrow, which is going to make your total loan amount 140. And I'll back into that real quick just to make sure I didn't lose anybody. Your rehab is 50 of it. And then you're buying it for 100, your down payment's 10. So we're going to lend you 90 on the purchase and 50 on the rehab for a 140 loan amount. Your interest rate is going to be 12%, which is going to make your payment $1,400 a month. And then your ARV, your after repair value, is going to be $200,000 when you finish the project. So if we're jumping over here to flipping it or selling the property, our ARV is 200 grand. So let's say in a perfect world, it sells for 200 grand. You owe us 140 plus some interest, but we really simplified this. So you owe us 140, and that means your net proceeds are going to be somewhere around 60 grand. Obviously, you're going to have some commissions and some things that come out of that. But for a super simplified example, $60,000 would be your profit if you didn't come out of pocket, if you didn't use any additional money. That's what it would look like. And then for exit 2, if you decided, hey, you know what? Maybe there's a couple scenarios. One, it didn't sell, it's sitting on the market, and now like I got to pay my lender off. Or you did this with the intention of making it a rental, you can refinance it into a DSCR loan. DSCR loans are unique in the way that they qualify off of the property's income. So I don't need tax returns or W-2s or anything like that from you in order to do a refi. It's all based on the property's rent. Is the rent that the property brings in greater than what your new mortgage is going to be? And if it is, and your credit score is above 620, then we can get you approved for that. Here's what that scenario looks like. Your ARV was 200,000. So that's what it appraises for. You can borrow up to 80% of what it appraises for. So 160 grand. You're going to owe the lender 140, which is going to make your net proceeds here $20,000. So in this case, you now have $20,000 and a rental property in a long-term loan. And the rates on these DSCR loans right now are going to be high 6, low 7%. There is one key difference that we don't outline here. That 60 grand profit above is going to be taxed at your normal income rate. And the $20,000 proceeds from the refinance is not taxed. That's considered debt. So you don't, one thing to keep in mind, one reason we love the rentals is because when we do these cash outs, it's untaxed, it's non-taxable income. Kind of makes it easy. This example that I have up here, does anybody have any questions about this before I change slides and move away from it? I am winding down on the slides. So great question. Are you making payments, or is that put on the back end? So the question that Erica asked is, I'm going to word it differently, but do you allow for deferred payments? Some lenders out there will allow you to not make any interest payments along the way and pay it all at closing. This can be a good strategy for you if you're not super liquid. It can also be a really dangerous strategy, because if the project takes too long, or if things happen and it goes awry, you're now stacking payments on top of your principal for the very end. So we do not allow deferred interest. Our payments are due on the 1st of every month, and we don't really defer anything like that. One thing that we do defer is the rollover fees. So if you need, or an extension fee, if you pass your original term and you need a couple more months, we don't charge you for that until payoff. We just put that on the HUD to pay off. We don't want to make it any more challenging on you. Can you do a 1031 exchange from a flip to rental BRRRR? I would probably suggest talking to a qualified 1031 intermediary or your tax accountant. So generally, in order to 1031 something, the intent has to be that property was going to be a long-term hold, and you have to have owned it for more than 1 year. So if you do a flip and it's less than 12 months, that's going to be the first red flag that would kind of keep you from 1031 exchanging from a flip to a new rental. Where does the money come from for the monthly payment on the loan? Yep. So at closing, we're going to have you complete an ACH form with your business bank account, your personal bank account, wherever you would like to make your payments from. It doesn't matter. It could be personal account. A savings account. We don't necessarily care. We auto draw the payments from the borrower on the first of every month. And obviously we're fairly reasonable and understanding. If you call us and you say, hey, something crazy happened, can you pull it on the second, third, whatever, then we do. And our book of business is really crazy. The amount of the people that we lend to are, we go through this stuff in high detail. So we want to make sure everybody is fully on board, understands what's going on. And we don't see very many people we've never had anyone miss a payment, but we see very few people pay later than the 10th. And that's like usually a rare case in itself. What are typical ranges of ROIs you see in Northwest, Northeast DC, as well as Virginia suburbs with these projects? I mean, a lot of people that we're seeing are targeting 30% for an ROI. Like we see DC's usually a little tighter than that. And I guess same thing with Northern Virginia. We see a lot of 20-25% margins. But once you start dipping below 20% for your ROI, you invite a lot of risk if things don't go well. All right, I'm going to roll to the next slide now. Hard money as an investment. So we add this slide because some people out there aren't going to want to take on the risk of flipping a property or buying a rental, but they still want to get into the game. They want to be part of real estate investing, or they're tired of the stock market. We offer something called hard money participation. I've already told you that we lend the money at 12% to our clients. Beltway lending grows organically on the other side. So if we approve a $100,000 loan and we're charging 12%, we then, once the loan is approved, put together a deal, a hard money opportunity flyer that we send out to our investor base. We allow you to participate in the hard money loan. We pay a fixed 10% return on your money, and it is secured to the property. So what does that look like? On a $100,000 loan, our borrower, our client, is paying us $1,000 a month. And we, and you, as if you decided to say, hey, Brian, I have $100,000 and I'd like to get the 10% return. Every month you're going to get $833, which totals up to about $10,000 a year to give you that 10% annual return. And we grow this. This is obviously very methodical. We grow this very slow. We work with 48 or 49 investors right now that participate in hard money, and it's been very good for a lot of people. We've never had anyone miss a payment. We've never had anyone lose their money. We've never had a borrower struggle or have any issues. So that keeps the book very clean. If you're sitting on money in a self-directed IRA or a liquid savings account or inheritance, or a relative is, and they're working in the stock market or have it in CDs, we should definitely jump on the phone and see if this would be a good fit for you, because a 10% return right now is beating everything. It's beating the stock market, and it's beating all the CDs out there. So each deal is analyzed individually by the investor. So Beltway Lending underwrites the deal and puts together a snapshot of the deal. I'll see if I can find one actually. Yeah, let me see if I can find one while we're on here. So Beltway puts together a snapshot of the deal and sends it out to, here we go. Let's see what this is. Okay, so here's one we did. Here's one we did a while ago. So this is what our PDF that goes out looks like. This borrower has a 760 credit score. They own 160 rentals. They've done 15 deals in the last 3 months, and they had 130 grand liquid in the bank. This property was in Cambridge, Maryland. It's a single family. Actually, this one was not a single family. I do remember that. Maybe this is version 1 of it. And they were borrowing 14 grand for rehab. After repair value is 225. The loan amount was 176. We pay our investor 10%. We estimated a 6-month hold time. Our investor is getting $1,466 per month on this specific deal. And we're probably sending between 9 and 10 of those out per week as we're kind of growing there. I apologize, but I needed the answer. The monthly payments come out of your pocket. They're not factored into the loan amount. We lend in 46 states. I think like Alaska, Nevada, North and South Dakota, we don't really lend there. Otherwise, pretty much all over. For minimum investment, we want $50,000. And then what we do from there is if you want to increase what you have with us, you can increase it at 25. We put a barrier at 50 kind of on purpose. We don't want to just take 25 grand from anybody. It just becomes a lot. So at 50, we then allow you to add to it in intervals of 25. So once you're with us, you can add on to it. We do have a local Baltimore office. We're actually in Kingsville, so a little northeast of Baltimore, just past Perry Hall. And yes, when anyone participates in hard money with us, we just activated an online portal where you can see kind of everything. You can see like a snapshot of your portfolio, what loans you're in, what addresses, how long they've been going, what the return is, your payment history, and things like that. A participating lender needs to cover the whole deal. Great question. The answer to that is no. We allow people to start with 50 grand, and our average loan amount is somewhere between 150 and 165. So a lot of times what we'll do is, let's say that, Nicole, let's say you're like, hey, I have 75 grand that I'd like to contribute, or I'd like to participate in a hard money loan with, and the deal is 150 grand. Generally, what we will do is Beltway will actually lend with you on that. Or if I have Nicole and Jeremiah wants to do 75, I'll put you guys together. We secure both of you to first lien position. So you are secured for your respective percentage of the deal. And in some cases, it's more than two people. Generally, it's not more than two people, but Beltway kind of stays in the middle too. Do you get your whole investment back after the deal closes? I'm assuming you can reinvest. Great question. Yes, when the loan pays off, so I actually had this call this morning. We have one that's going to pay off tomorrow. So I called the investor, the back end guy that has his money with us. And I said, hey, Dave, great news. We have one that's going to pay off tomorrow. And we have another loan that's going out tomorrow afternoon. If you'd like to keep it rolling, we'll update the paperwork and keep everything moving. If not, we're happy to send it back to you. And he obviously was like, let's keep it moving. Like, this one was a short one. Want to stay in the game. So the money you invest is put to a specific flip, not the entire amount provided to many projects, flips you have in EV. Correct. We do not have a pool or a REIT structure. We lend on what's called a deal by deal basis. So if you give me 150 grand, it is tied directly to one property. Now, if you called me and said, hey, I have 150 grand and I have a loan for 100 and two loans for 100, I may say I can put you into, these two loans. But yes, does the borrower have to be an experienced investor? Yes and no. We understand everybody starts from somewhere, has to start from somewhere. So our process, we go and meet you generally, and we want to understand your scope of work at the project. So we're there not just listening to, like, does the numbers make sense, but also, does this borrower have it together? Can they do this deal? And before we put the stamp on any borrower, we really kind of dig in and make sure that it's going great. Can I opt not to receive the money and have the interest reinvested? Yes, we have that structured for a couple of people as well. It's a little bit more unique, but yes, we can do it. No problem. Lots of questions. I don't usually get this many questions on hard money participation, so this is great. I love, this is a great topic to kind of talk about. Is there a main mix ratio regarding property value to market value in a neighborhood? Again, we're going to cap out and be somewhere between 70 to 80% of what the future, the ARV of that property is. So that's how we're protected. Do I speak Spanish? Personally, no. I have a gentleman on my staff named Bernardo. He's one of our originators, and he is bilingual, and it's great. He's happy to connect you with him. Jeremiah, our contact is going to be all in this chat. It'll keep getting posted as we're kind of rolling through it. Let's see. Client reviews. So one thing I think that sets Beltway apart is, right now, as of today, I have 164 Google reviews, and I have nothing less than 5 stars. It's over 2.5 years of hard work and effort, obviously. I think over those times we have gotten a couple of reviews that, like, one was from a competitor that was removed. I see you, Jen. And but yeah, so perfect, stellar rating right now. And Jen just commented, we're getting ready to we're working on a deal for Jen that's going to close next on the 18th, so it'll be next week. But Didn't hear my answer to the question, so forgive me. Have there been any issues involving an investor cop not getting paid? No, I don't even have borrowers pay me after the 5th of the month. I've never had a borrower miss a payment, and I've never had an investor not get paid on time. We pay these out via direct deposit on the 10th of every month. That's when our system, we have a super expensive software that reaches out and grabs the payment from the borrower and then sends it to the investor. So that's kind of how that looks, and that happens on the 10th. Credit score influence the rating and points. Credit score will not necessarily. We're fairly picky, so I want good, strong borrowers with good credit, obviously. But I understand things happen, right? You got bankruptcy. Again, we're looking for like track record of payment is one thing we look at, and then from your credit report that we pull, we can look at your total monthly expenses, your bills, whether that's minimum, car payment, mortgage, things like that. And we ask you, we don't necessarily prove it unless we're concerned. We ask you, how much do you think you make? We have your bank statement, so we can kind of see, hey, they told us they make $100,000 a year. They have $8,000 every month being deposited. Okay, this makes sense. And they only have $2,000 a month in their monthly expenses. So it's a very common sense underwriting. I want to make it more accessible to people. I'm generally going to be 12% interest, and I'm generally going to be 2 to 3 points. I'm not out here to take advantage of people. I want to help people get started. My team wants to help you get started. So we're not, how do rates compare to Dominion and Lima Capital? I know my competitors in and out. I can tell you the 2 problems you'll have with each of those, but I won't outline which is which. With one of those, the communication is where you'll lack, and I guarantee you'll miss closing. With the other one, their process is a disaster. So maybe I see the true there. So maybe you know who I'm talking about. But yes. So I think I make a living off of communication, right? Our team, look at the reviews. We're gonna pick the phone up when there's good news and when there's bad news. We're not gonna let it sit for 2 weeks and then call you to say, hey, we missed the closing. Like, hey, this came up, and here's how we fix it, or here's how we move forward. I got some good news and I got some fair news, and here's what we're gonna do. I think it's Tim's famous line right there. Can I talk about points again? Yep. So points in hard money it's that points equals origination fee. They're the same word, basically. They mean the same thing. So it is basically a fee paid to the origination company, to the hard money lender. It is a one-time fee at closing. So when I say 2 points, that means 2% of the loan amount. So if it's $100,000 loan and you're paying 2 points, 2%, you're paying $2,000 at closing. And I think you should expect in our market between 2 and 3 points. And once you start seeing more than 3 points in your origination, more than 3% of an origination fee, then it's time to bring that to someone and say, hey, is something wrong here? Why am I being charged like this? For us, we have a $3,000 minimum origination fee. So if someone borrows $90,000 from us, it's going to look like more than 3 points because we have a fixed fee. Like the lower loan amounts obviously look more expensive. Can I get my down payment included in the loan? After we've done some deals together, we get much more aggressive. Generally, we start with 10 to 15% down, usually 10, but we do get aggressive with our borrowers as long as the deals are really great, the borrowers are really polished. We do some creative things. I'm an investor. I know that I can't put 10% down on 30 deals at a time. So I understand, and we want to work with the rock stars. So if you fall into that category, then we're always open to ideas. Here's a slide on showing how to reach us. That's my personal cell phone number. The one that's getting shared in the chat is our main line. My email, and then I have Dante in there as well. I promise you, if you reach out to me, I'm probably going to loop Dante in. So maybe if you're going to text me, which would be my preferred way for you to hit me, group chat me and Dante in the same one. That would make all of our lives super easy. And obviously our website's there, emails, everything you need to kind of get a hold of us. What was I going to say? if there's any other questions about hard money or participation, like you can keep it rolling. I'm happy to, I don't have too much going on. I'm good to stay on here as long as you guys want, or until John kicks me off and tells me I'm not welcome back.
And hey, I'm stepping in for John. This is Alana. How are you doing? While people are thinking of their questions, put them in the chat box. I just want to let everybody know we have a great tool that is basically you can plug and play, right? You're able to plug your numbers in, see if it's a good deal. It's basically a free analyzer. If it's being dropped in the chat box, if you're interested in that worksheet, fill out the form. We'll make sure you get that worksheet. I will make sure you get that worksheet by Monday at the latest. Trying to get tomorrow, Monday at the latest. Just in case you don't receive it, I will put my information in the chat box for you to have as well.
Let's see. Perfect. Yep. The class was recorded. They'll probably send it out in a couple of days. I have another hard money opportunity PDF. Kind of when I searched it, I came up with two of them. So I'll show you another one real quick because this is a little bit different. Beltway will lend on we'll lend on most properties. So this one here, 221 Stemmers Run Road in Essex, was a mixed use property. The bottom was commercial and the top was 2 apartments. Rockstar borrower on this, they bought it for 500 and came to us and said, I want to borrow 350. I don't need the 10% down option. I want to have some more of my money in it. So that's we'll lend on not just residential stuff. We like the out of the box stuff. John's providing me with everyone's email. When this wraps up, I'll send you guys, me or Dante, I'll send out a thank you email. We'll send over the slides so you guys have them. Why would you get bad news if you've already vetted the borrower initially? What could make a deal not go through? Great question. My comment above when he asked about those 2 other lenders was more in regard to the refinance process with a DSCR loan. And a lot of things have the potential for going wrong. We don't see it happen often, but it does happen. Like, bad news is a part of life, and you have to be willing to pick the phone up and call someone to go through it. So what could happen? An appraisal, hard money, or DSCR could come in low. That could be a problem. That's a issue. There could be something in your background that we have to talk through. I'm not going to pull your background on day one. Usually credit can help lead those conversations as needed. But yeah, so I mean, appraisal is one of the big things. Title could be a big thing. Hey, we noticed this. Somebody actually asked above, and I missed this question earlier. I mentioned we can fund in 24 hours. It's not comfortable. It's rare that we have to do it. All the stars have to align for that. Title obviously has to be ready and has to get us the documents, the commitment, and everything for us to review. And our review and our underwriting is in-house, so we can roll through these things like it's our job, not like, hey, this is in a queue and I'll see it tomorrow. We're going to roll through it. We want to get these deals to the table. When we tell you no to a deal, you have to keep in mind that we don't make any money. We are not in the business of saying no. We're in the business of helping you structure deals and helping it work and helping you make these things happen. So that's what's the commission for agents referring clients? That's perfect, because I left this out of the slide. This is great. So hard money lending and DSCR loans are like the wild, wild west. There is no governing body. There are no rules like you have on the traditional side. On the traditional side, you have RESPA, which kind of helps keep things in line so that there's no favoritism, whatever the case is. That doesn't exist over here. If you bring us a hard money client, we are going to pay you at least a 0.5 point, and we are not going to charge the borrower any more money. It's not like, hey, your borrower was paying 2, now they're paying 2.5 just so you can get paid. No, we also pay you off the HUD. I'm not going to put it on the HUD. Your borrower is not necessarily, the client you bring me is not necessarily going to know, oh, they made $2,000 on this. So a 0.5 point on the loan amount is going to be $500 for every $100,000 that we lend. And our average loan amount, $150 is going to get you a $750 check. Here's what's unique about our referral program. It pays you in perpetuity. So a lot of lenders, what they do if you bring them a borrower is they pay you on the first deal and then they don't pay you again. our CRM is set up so that if you bring me someone, we're going to send you the check. And if 2 years from now they come back to me for another loan, even if you and I haven't talked, Tavon, our system's still going to send you a check after closing. We want to help people. I don't want to take advantage. Believe me, we're appreciative anytime a client comes our way. One question that is not in here that comes up is what happens if you refer me a client that's already working with me or has worked with me in the past? And as long as it's not done to manipulate us, which we wouldn't necessarily know in the beginning, we always pay these out. We want them brought back. We maybe the borrower wasn't thinking about us if they asked you for a lender recommendation. Do these loans work the same for foreign investors? Yes, they work the same as far as structure. We can still lend purchase money and rehab money. The down payment requirement is a little greater. We can work with almost any individual out there. So we can, that could be any citizenship status, citizen, ITIN, green card, foreign national, we can pretty much do it all. Now the down payment changes kind of at different layers, and Bernardo from our team actually is probably the most well-versed, and Tim are the most well-versed in that. So I'm not going to jump into that because I don't want to tell you a down payment requirement that's not accurate. Do we get commission discount if we're the borrower? You do not. But bring us a borrower and we'll make sure I'll take real good care of you on the first referral. Maybe I'll pay you more than a half a point, or I'll pay a little bit heavier on that. That's what I was like. How about if I'm an investor who needs a hard money loan? Is there any benefit? That's a good question. I have a guy that lends money through us, and what we ended up doing with him is lending, if he had 100, he has 150 with us, and he's like, hey, I'm buying one. We gave him a different shake on the rate. So it's almost net zero. It's a very rare, unique thing, but it does happen. I don't want you to give me money that I'm paying you 10% for just to turn around and charge you 12% for similar money. So we do work with that. No problem. Let me get rid of this. If everybody has our contact information, I'm gonna turn the screen share off just so I can see again. Let's see. Maybe. Oh, nope, I don't want to do that. There we go. But yeah, please keep asking questions. We can keep running through it, and you're welcome to. You can raise your hands and ask questions. I'm okay with that. Whatever these guys want to allow, we're good to go.
Yeah, we have about 7 minutes left, so definitely get the questions in the chat box. Come off mute, ask the questions.
What is wet grass? I explained this right before because if I sit in the right place, it's a really nicely placed rug. Virgil Abloh was a designer for Louis Vuitton and for Nike as the Off-White collection. This is a rug that he designed. It's looks like grass when you get close to it. It was a gift from one of my partners here at Beltway Lending. Christmas gift. Pablo. Yeah, that was another gift from one of the employees. I'll tell you, it's funny. I'll tell you the story. So one of my employees says to me, he's like, I'm the best sales guy we got, right? I'm the best. I'm like, all right, well, I'll compete with you. And he goes, no, it's not fair. He's like, if someone was buying cocaine, they want to go directly to Pablo Escobar. If someone's going to get a loan, they want to go to the investor who's done 200 deals in the last 4 years. He's like, it's not fair. You're like the Pablo Escobar of this game. I can't compete with that. So what he did for Christmas is he took my photo. I'm not going to take it off the wall, but he took my photo and the famous Pablo Escobar mugshot and had someone on Fiverr merge my face onto the Pablo Escobar thing. So we hung it up, and I always forget that you can see that in these. I should maybe move it. But yeah, that's a good. So I really appreciate everybody. I really appreciate everybody jumping on and listening. John's going to pass along the emails. We'll send you out the slide deck. We'll send you out just a thank you and everything, and a link to getting pre-approved and things like that. again, you're welcome to text me. You're welcome to text Dante. If you're going to text me, just group chat us, make it easier on all of us. If you want me to connect you to Bernardo, I know his number was posted above. I'm happy to do that too. So I'm going to email you the slides. We're going to email out the slides.
Thank you so much, Brian. This was amazing. Again, we will get the recording out to everyone. It won't be until tomorrow because we have to wait for Zoom. We will, if you filled out the form, we'll drop it one more time in the chat. If you filled out the form, you will get the deal analyzer by Monday at the latest. We're just working out a few formulas, making sure everything is up to date for today's market. And again, thank you all so much for joining in. Thank you so much, Brian, for all your time today.
Thank you. I really appreciate it.
Absolutely. Everybody have a great day.